Hello everyone, I hope you are doing well. So today we are going to start our next chapter, which is reporting, and reporting is the last stage of audit. If you recall, we have done the first three stages of audit. The first was planning stage, then comes the evidence stage in which audit procedures are performed. Then the third stage was completion and review, and finally the stage of reporting comes when auditor forms the audit opinion by issuing the audit report. So first thing that we are going to discuss is components of the audit report. You may ask in the question to define and explain, for example, 5 components of auditor's report. All right, this is not going to be a scenario related question, but this can be a small part of a long scenario related question. So let's see what are the components of the audit report. First component is title. It clearly identifies that it is an independent auditor's report. So the title of the audit report is Independent Auditor's Report, to make it clear that what is this document all about. Then addressees identifies the intended users of the report, because primarily shareholders are the intended users of the audit report, so therefore they are addressed in the audit report. Then comes auditor's opinion. It provides auditor's conclusion about whether the financial statements gives true and fair view. Okay. So the next component of the audit report is auditor's opinion, in which auditors explain whether the financial statements give true and fair view. Next comes, just next to the audit opinion, the other component is basis of opinion. Provides description of standards which were being followed during the audit. So it gives description of auditing standards which were being followed throughout the audit. And the reason of giving reference of the professional standards is to increase the credibility of the audit and to increase the confidence of the users upon the audit report. Then the next component is key audit matters. What are the key audit matters? Draws user attention towards significant issues about which they should be aware. We'll be discussing it in detail in the later part of the chapter, but now you should only understand that this component gives information to the users about the significant issues or matters which were being identified during the audit. And auditors considers these issues of such an importance that they should be communicated to the users of the financial statements. Then comes other information. Again, we are going to discuss this part in detail in the later part of our lecture. But let's see what is it. It clarifies that auditor's report does not cover the other information like chairman's statement. An auditor read that information in accordance with ISA 720. So basically, let me explain this. Financial statements are part of company's annual report. Auditor is only responsible for forming an opinion on the financial statements. Apart from financial statements, there are various other information that is included in the financial statements. For example, the chairman's statement, the statement of corporate governance, the CSR report, corporate report, social responsibility report, and likewise there could be various other information which is included in the annual report. Whereas auditor report only covers the financial statements, which is also the part of the annual report. So this component is included in the audit report to make this clear that auditors have formed opinion only on the financial statements and not on the rest of the information which is included in the annual report. And for the rest of the information which is included in the audit report, auditor has performed tasks according to the requirements of ISA 720. Then comes the next component, which is responsibilities of management. It clarifies that it is management's responsibility to prepare the financial statements, including the internal controls. Again, the reason of adding this component in the audit report is to reduce the expectation gap and to clarify that what are the responsibilities of the management and what are the responsibilities of the auditor. So the next component is auditor's responsibility. It clarifies that auditor responsibility is to express an opinion on the financial statements. All right. So both these components clarifies the responsibilities of the management as well as the responsibilities of auditors, and the purpose is to reduce the expectation gap. Now, the next component is name of the audit partner. It identifies the person responsible of audit opinion, because audit partner is the person who forms the audit opinion, and therefore his name is mentioned in the audit report so that it is clear that this is the person who has given opinion about the financial statement. Then comes the signature of the audit partner. Then comes auditor's address. Here auditor address is basically the address of firm. Okay, so here the address of the firm is given, not the address of the audit partner's house. Okay, so this is the address of the firm, and then the date on which report is signed. Okay, so the date which is mentioned in the audit report is the date on which actually the audit report is being signed. Let me explain here as well that the signatures are of audit partner. So these were all the components of the audit report. Now, the next thing is the description of key audit matters. So this was the, one of the components of the audit reports, the fifth component. Now we're going to discuss it in detail that what the key audit matters are. The standard relating to key audit matters is ISA 701. It is comparatively a new auditing standard. It was introduced in 2016. ISA 701 communicating key audit matters in the independent audit report requires auditors of listed companies to determine key audit matters and to communicate those matters in the auditor's report. So it is, according to this standard, auditor's responsibility to identify the key audit matters which are then communicated in the auditor's report. Key audit matter includes, so there are basically three things which are included in key audit matters. What are those things? Let's see. Number one, areas of higher risk, assessed risk of material misstatement. A significant risk identified in accordance with ISA 315. If you remember, we discussed that some of the, while doing the risk assessment, auditor would identify some areas of financial statements as high risk areas. Those areas are considered to have more risk of material misstatement, and some areas are identified as low risk areas because those areas are considered to have less risk of material misstatement. So firstly, the thing which is considered as a key audit matter is the high risk area identified by the auditor as per the guidelines of ISA 315. Secondly, the key audit matter is significant auditor's judgment relating to the areas in financial statement that involve significant management judgment, including accounting estimate that have been identified as high risk, estimation uncertainty. Again, if you remember, I have multiple times explained that accounting estimates are high risk area because they are dependent upon management's judgments and assumptions. Because these accounting estimate involves management judgments and assumptions, and there is very less evidence in documented form to verify it. So the auditor has to use his judgment based upon the knowledge of business to assess whether the assumptions and judgment used by the management for calculating the accounting estimate are correct or not. So the second CAM or key audit matter, CAM is the abbreviation of key audit matter. Let me write it here as well so that if I repeat CAM, you don't get confused. So the second key audit matter of the CAM is those areas which requires significant judgments of the auditor, and generally those areas are related to the audit of accounting estimates, as well as it will include the materiality calculations, because the materiality calculations are also dependent upon auditor's judgment. Then comes the third key audit matter. And what is the third key audit matter? The effect on the audit of significant events or transactions that occur during the period. So auditor would explain that what were the significant transactions or events which occurred during the year and how did they affect the audit for the year. So this was all about CAM. Now let's discuss types of audit reports. What are the types of audit reports? Types of audit reports, there are basically two main types or two main branches of audit report. One is unmodified or unqualified report, in which auditor says that the financial statements give true and fair view and they are prepared in accordance with the applicable reporting framework in all material respects. So that is the unmodified or unqualified report, and you are aware about its wording. We discussed it in first chapter. Second type of audit report is modified or qualified audit report. So modified or qualified audit report is the report which is different from a unmodified or unqualified report. Another term used for unmodified or unqualified report is clean report. Okay, so this is a report which is different from a clean report. Now, following are the types of modified reports. Again, modified reports are also of different types. Okay, there are no types of clean report or unmodified report, but there are further types of modified reports. What are those types? A, modified report with unmodified opinion. Now, it is extremely important, make it clear, the first type of modified report is the report where the report is slightly different from the clean report, but the opinion is clean, the opinion is unmodified. Here, opinion is not modified, only report is modified because it is different from a standard clean report. Okay? What are the circumstances under which modified report with unmodified opinion is issued? Number one, material uncertainties related to going concern. This is one of the examples of modified report with unmodified opinion. Then number two, other matter paragraph. If other matter paragraph is included in the audit report, it is also an example of modified report with unmodified opinion. And number three, emphasis of matter paragraph. If emphasis of matter paragraph is included in the audit report, again, it is an example of modified report with unmodified opinion. Now we will start discussing all these one by one. Firstly, we are going to discuss what is the paragraph related to material uncertainties related to going concern. This section is included when there is a material uncertainty regarding the going concern status which the directors have adequately disclosed in the financial statements. The auditor uses this section to draw the attention of the users to the client's disclosure note. If you remember, in previous chapter we discussed, if the company has material uncertainty related to going concern status, in that situation, financial statements still can be prepared on going concern basis. But in that situation, management has to give a disclosure note about the material uncertainty related to going concern status. So in a situation where management has adequately and completely given a note in the disclosures about material uncertainty related to the going concern, in that situation, auditor includes this additional paragraph in the audit report. And the purpose of this paragraph is to draw the attention of the users towards the note or the disclosure in which the management has explained the material uncertainty related to going concern. So the auditors are including this paragraph in the audit report so that the users, being layman, don't overlook the note related to the material uncertainty of the going concern status. Auditor wants the attention of the users upon that disclosure note. Auditor doesn't want the shareholders and other users being layman, they are not aware about the importance and the significance of the matter, and the auditors think that they can overlook this disclosure. So in order to avoid this situation, auditor gives this particular paragraph, add this particular paragraph in the audit report. Yet adding this paragraph into the audit report doesn't mean that the auditors are qualifying the opinion. There isn't any need of qualifying the opinion because everything is adequately done as required by the accounting standards. But because this audit report is different from the audit report, which is a clean or an unmodified audit report. If you remember, we have discussed the components of the clean audit report, and there we didn't discuss this component. It means that this is not a component of a clean audit report. This is a different component which is only added where required. Because this component is an additional component which is not there in the clean audit report, therefore this audit report is termed as a modified audit report because it is slightly modified from the clean audit report. Yet the opinion in this report will be clean. Now the question comes, position in the audit report. It means that where will this paragraph be positioned? Where this paragraph will be placed in the audit report. So basically it is placed below the basis of opinion section. So if you see, the fourth component of the audit report was basis of opinion. So just next to basis of opinion paragraph of material uncertainties related to going concern is included. Now, then comes emphasis of matter paragraph. It is used to refer to a matter that has been appropriately presented or disclosed in the financial statements by the directors. The auditor's judgment is that these matters are of such fundamental importance to the user's understanding of the financial statement that the auditor should emphasize the disclosure. So basically the purpose of emphasis of matter paragraph is very much similar to the purpose of material uncertainty related to going concern. Emphasis of matter paragraph is included in the audit report to draw the attention of the users towards something which is adequately disclosed in the financial statements. Before 2016, if there was disclosure note of material uncertainty related to going concern, even in that case, emphasis of matter paragraph was given. But in 2016, after the revision of ISA 570, it requires to give the paragraph of material uncertainty related to going concern in an event where the disclosure note related to material uncertainty is completely and adequately given in the financial statements. Lastly, other meta paragraphs. So if you recall, we discussed that modified report with unmodified opinion includes 3 examples: material uncertainty related to going concern, other meta paragraph, and emphasis of meta paragraph. So now we are going to discuss other meta paragraph and when it is issued. It is included in the auditor's report if auditors considers it necessary to communicate to the users regarding matters other than those presented or disclosed in the financial statements. So basically, other matter paragraph is included in the audit report to draw the attention of the users towards something which is not related to the financial statements, but is, according to auditor's assessment, very important, and the users should be aware about it. For example, what can be that issue which is not related to the financial statement, yet auditor wants to draw the attention of the users towards it? Other information. Now, firstly, understand what is the other information. It refers to financial or non-financial information other than the financial statements and auditor's report thereon, included in the entity's annual report that is not necessarily subject to the audit. Most of the time, it is the other information is not subject to the auditor's opinion. What are the examples of other information? For example, social and environmental reports, which are also termed as CSR reports. CSR reports are abbreviation of corporate social responsibility report. Let me write here that these are the examples to make the things more clear. Chairman's report. In chairman report, chairman gives his point of view about the company's performance, future plans, etc. Then one example could be corporate governance statement. In corporate governance statement, management explains about what corporate governance system do they have. So these are the few examples of corporate other information. Apart from these, there could be many other information included in the annual report. For example, um, cash flow forecast, profit forecast. Again, cash flow forecast or profit forecast is not the part of the current year audited financial statement, because that information relates to the future. Then let's discuss auditor's responsibility related to other information. As I've explained, auditors are not required to form audit opinion on the other information. Auditors give audit opinion on the financial statements. But because this other information is the part of annual report, therefore there are some responsibilities of the auditor related to other information, and those responsibilities are identified by ISA 720. Now let's discuss. Auditor must read it. It means other information, to identify any material inconsistency with the financial statement. So the purpose of reading the other information is to see whether there is anything given in the other information which has material inconsistency with the information given in the financial statement, or the auditor's knowledge obtained during the audit. Okay. If auditor identifies a material inconsistency, then what they should do? Number one, perform limited procedures to evaluate the inconsistency. They will perform procedure to assess what the inconsistency is. And why is that inconsistency? Is that inconsistency because of errors in the other information? Or is that inconsistency because of the errors in the financial statements? The auditor should consider whether it is financial statement or the other information that requires amendments. As explained, the purpose of identifying the inconsistency is to see which information requires amendments, because if inconsistency is there, it means either financial statement have errors or other information have errors. If other information requires corrections, discuss the matter with management and ask them to make the correction. Obviously, you will ask the management to make the corrections in the other information if according to your procedures it has the errors. If management refuse to make the correction, communicate matter to those charged with governance. Here, those charged with governance refers to the audit committee, the non-executive directors. If the matter remains uncorrected, even after informing the audit committee, if the matter is still unresolved, the auditor must describe this in the audit report. Then what would auditor do? Auditor would describe this in the audit report, but without qualifying the audit opinion. Why wouldn't auditor qualify the audit opinion? Because audit opinion is about financial statements, and financial statements are not having any error. Error is in the other information which is not being corrected. Therefore, due to the error in the other information, auditor cannot qualify the audit opinion. But it is extremely important to bring this to the knowledge of the shareholders and the other users of the audit report. So auditor would explain this in the audit report. How? By adding other matter paragraph. So the purpose of other matter paragraph would be to explain to the users that the particular other information is having errors. Now, let's discuss the other type of the modified report, which is modified report with modified opinion. Okay. So firstly, we discussed the type of the modified report where Report was modified, but opinion was unmodified. Now we are discussing the second type of modified report, where modified or qualified report is with modified opinion. For the clarity, I am again opening it. Have a look. Just a second. Here. Types of audit report discussed. First type is unmodified, unqualified clean report. It doesn't have any types. Then comes modified or qualified report. It has further two types. Type A is modified report with unmodified opinion. Now we are going to discuss type B, which is modified or qualified report with modified opinion. Okay. Now let's discuss when it is issued. It is issued under two situations. And what are those situations where it is issued? Number one, when there is disagreement between the management and the auditor over the following. So the first situation where modified report with modified opinion is issued, where the auditor and management has a disagreement over an accounting treatment or disclosures. Okay, so as per auditors, there should be some different accounting treatment used, and disclosures should be given, and management isn't agreeing to it. Obviously, auditor would be explaining them to give the disclosures and do the accounting treatments as per the accounting standards. But if the management is disagreeing with the auditor, this could lead to modified report having modified opinion. Number two situation is there is scope limitation and auditor is unable to obtain sufficient and appropriate audit evidence. Scope limitation means a situation where auditor couldn't obtain sufficient and appropriate audit evidence. And without having the audit evidence, auditor definitely cannot give audit opinion. Now let's discuss them in detail. When there is disagreement between the management and the auditor, again, there could be two different types of report. Okay. Number one, except for opinion. What is except for opinion? Let's discuss. If the misstatement is material but not pervasive. What is pervasive? This means that the matter is material to the area of financial statement affected but does not affect the remainder of the financial statement. Pervasive is something which is spreaded all over the financial statement. If there is a matter which is not pervasive, it means it is not spreaded all over the financial statement. So, I repeat, in case of disagreement when except for opinion issued, if misstatement is material but not pervasive, except for modified report is issued, which states that except for this matter, the financial statements give true and fair view. For example, if there were material misstatements in the receivables, but that misstatement were not pervasive, then what would auditors say? Except for receivables, financial statements give true and fair view. The second type of report which is given in case of disagreement is adverse opinion. Now let's discuss what adverse opinion is. If misstatement is considered material and pervasive spreaded all over the financial statements, adverse opinion is issued. This will mean the financial statements do not give true and fair view. So in case of adverse opinion, auditor would straight away give an opinion where he would say that as a whole financial statements do not give true and fair view. Whereas in except for opinion, he says that a particular item is not giving true and fair view. Other than that, financial statements are giving true and fair view. But in case of adverse opinion, he's saying the entire financial statements are not giving true and fair view. Then let's discuss the situation when there is scope limitation. Again, under scope limitation, two different types of reports could be issued. Number one, except for opinion. If the matter on which auditor was unable to obtain sufficient and appropriate audit evidence is considered material but not pervasive, auditor states that we cannot form an opinion on this particular matter. Except for this matter, financial statement gives true and fair view. Exactly like in case of disagreement, in case of scope limitation as well, if the auditor was unable to obtain sufficient and appropriate audit evidence on a matter which is material but not pervasive, then auditor is going to say that I cannot form an opinion on this particular item Except for that, financial statements give true and fair view. And then lastly, disclaimer of opinion is also a type of qualified opinion which is issued in case of scope limitation. Let's see what it is. What is it? It is issued when the auditor has not obtained sufficient appropriate evidence and the effect of any possible misstatement could be pervasive. Okay, so in this case, the item about which the auditor was unable to obtain sufficient and appropriate audit evidence was material as well as pervasive. So in that case, the auditor would issue disclaimer of opinion. And what would auditors say in this case? Or it states that we cannot form an opinion on the financial statement. So if you compare, in except for opinion, the auditor was saying we cannot form an opinion on this particular matter, except for this matter financial statements give true and fair view. Whereas in this case, auditor will state that we cannot form an opinion on the financial statement. So he would say that as a whole we cannot form an opinion on the financial statement if he is unable to obtain sufficient and appropriate audit evidence about the matter which is material as well as pervasive. Now, another difference between a clean report and a modified report with modified opinion is of basis for modified opinion. If you again recall, the fourth component of clean audit report was basis of opinion paragraph. Now here, what is the difference? When the auditor decides to modify the opinion, they must amend the heading basis for opinion to basis for qualified opinion. Obviously, when the opinion is qualified, the heading would be changed. Either you will give it a heading of basis for qualified opinion, or you would specify if it is an adverse opinion, you will say basis for adverse opinion. If it is a disclaimer of opinion, you would say basis for disclaimer of opinion. Or if it is an except for opinion, you will say basis for except for opinion. Okay, so whatever the type of opinion is, accordingly you will amend the heading of the basis of opinion paragraph. Then the section will explain the reason why the opinion is modified. So the purpose of adding this paragraph is to clarify the situation and the circumstances under which the auditor has to modify the opinion. Auditor would explain to the shareholders that why the opinion is modified or qualified. For example, which balances are misstated, which disclosures are missing or inadequate, which balances the auditor was unable to obtain sufficient appropriate evidence over and why. So this all explanation will be given in this paragraph. If possible, a quantification of the financial effect of modification will be included. So if possible, auditor would explain that this was the amount about which I was unable to obtain sufficient appropriate audit evidence. This was the amount about which the disclosure is inadequate, or this was the amount which is misstated, to make the things more understandable and more clear to the users of the financial statements and the audit report. Now this paragraph explains the different types of audit reports which I've already explained. So this was all about the chapter of reporting. With this, we are done with all the 4 stages of audit. Now we are only have to do 2 chapters. One is corporate governance and the other one is internal audit. We'll be doing in the next 2 lectures. So this was all for today. Bye.